It's time now for Mortgage Matters with your host, Bill Sandvig. Bill Sandvig serves as market leader running the South Carolina coast for Movement Mortgage. Movement finished 2014 ranked as the #1 mortgage company in purchase mortgages for the Charleston Tri-County area. And they're still growing. And now your host of Mortgage Matters, Bill Sandvig.
Hello, Charleston. I'm Bill Sandvig. You're listening to Mortgage Matters, another edition this great weekend here in the state of South Carolina. Thank you so much for listening and tuning in. I'm excited to be here today. We got a lot of great things to cover today. We're going to talk about how you can expand your real estate horizons by maybe getting into some investment property real estate. A lot of people out there might think that investment property purchases are not in their future, but I'm going to talk a little bit about how you can make that happen with not as much money as you might think you need. The rental market is very hot right now, and now is the time to buy that investment property. And we're going to talk about, hey, you're getting ready to sell your house. Well, it's time to think a little bit further than that. And also we're going to get into, hey, the thing we like to talk about most, which is how can we put you in the very best position to get out and buy your next home? We are live in the studio, so please call in here at WTMA 1250, the Big Talker, at 843-556-1250. I'm happy to take any of your mortgage-related questions, real estate-related questions, finance-related questions. Hey, I'll even tell you, I'll give you advice on family and kids. I don't care what we talk about, just call in. So, I want to get right into a little bit of news this week. Rates started to tick down a little bit as the unrest that was going on in Greece and China was taking place in the forefront of the news, and the week finished the opposite of the way it started. The markets and interest rates and mortgage rates moved up in the most significant two-day move that we've had since 2013, and we expect that is not going to slow down. Big news from the Fed. Janet Yellen came out this week and said, hey, investors, bond hikes are coming. Mortgage hikes are coming, and they're coming in 2015. Now, she hasn't given us an exact date, but we know that it's going to take place. Right now, if you watch the market, the 10-year Treasury is at 2.42, which means that it's moving up. It started the week at 220. And it's moving up. Now, a lot of different experts are saying that, hey, I expect that the bond is going to continue to move up and continue to swell as we approach the end of 2015, hitting as high as 270. Well, to put it in perspective, where we are right now in the closing of the markets on Friday, we are at about a 12-month high as far as interest rates go. It was August, September of last year when we had rates that were this high. And if they keep moving up towards that 270 mark and interest rates, mortgage-backed securities follow the 10-year Treasury, then we're going to see interest rates that have been the highest in the last 3 years. And, the expectation is with the economy recovering and people buying houses, the market as hot as it is, that this isn't going to change. That's going to continue to happen. Now, my expectation, my guess, people ask me all the time, what do you think interest rates are going to do? I'm building a new home. I've just gone under contract. The house isn't going to be finished until February or March of next year. It's a new construction home. I have an opportunity to spend some extra money and lock in an interest rate for 6 months. Bill, should I do that? Should I spend this money and take a slightly worse rate now in order to secure not having a significantly worse rate later? Well, the time might be now to start thinking about that if you are going under construction. Typically, I've said, let's hold off. We'll watch the market. If there's any significant moves, we can make a decision then. And that's been the right answer for the last couple years. But with what is out there in the news right now, with expectations in the third or fourth quarter for rates to go up, it might be a different time right now, a different conversation. So if interest rate hikes are on the move and we are on the horizon and we know that that's coming, what does that mean for you? What does that mean for you right now? Well, in my opinion, it means the time for buying your next home is today. You've got to think about accelerating that timeline and making that move now, because when rates move, so does your affordability. Housing affordability factor, it's a metric that's tracked by real estate professionals, people in my industry. The housing affordability factor is still at the lowest, relatively lowest it's ever been in history. It's not the very lowest. When you compare it on a macro scale to how it's been traditionally in the last 40 years, it's as good as it's ever going to get. That means that you can buy the most house for the least amount of money as you've ever been able to in history. Right now, today, this weekend, you can go out and buy a house earning less and getting more house than you ever have in history. So you've got to think about taking action and taking action now. So when you're thinking about buying a house, if you're in that 4, 5, 6 month time frame of buying a house, reach out now. Give me a call now. You can call me anytime at my cell phone, 843-300-7870. That's my cell phone. I'll talk you through what your plan is for your family, for your next home purchase. And we can talk and brainstorm and put you in a position so that when you are ready to make that move, that you are going into it smartly with all the information you need and all the tools you need. You can also find me on my website, www.lowcountrylending.com. You can find me there, put in a free buying power evaluation, and I'll be able to assess your situation and put you on the right track for making your home purchase. There are a lot of things that go into this transaction. What's probably going to be the most significant and largest transaction that you ever have in your lifetime. So think about it and plan for it now. There's a lot of moving parts to go into a mortgage these days. Maybe you've heard horror stories from family or friends. Maybe you've been through it yourself in the last year where you went to a bank and you started this process. Maybe it was for refinancing or purchasing a home, and it was just an absolute nightmare. All the documentation requirements kept coming. All the pain of the process just kept coming, and it dragged out and it dragged out and it dragged out. And a lot of that can be avoided, one, by using myself, by using my team, by using Movement Mortgage, because we do the process completely different than anyone else. We do upfront underwriting. That means we don't wait a couple of weeks of back and forth with you before we send you into the underwriter to get you a loan approval. We do upfront underwriting. Before you even go under contract for a house, we're going to make that commitment to you to get you approved. So what other things can we do when I talk about, hey, buy now, plan now? Let's talk about plan now first. Plan now means give me a call so we can talk about what you're trying to achieve. Are you planning on putting down 5%? Are you planning on putting down 10%? Do you understand how your mortgage product, your payments, and your buying power can change from having no money down to having 5% down? There's significant impacts that change the product that you can be available for, the programs that you can be eligible for, and the earlier we talk about it, it can literally save your family tens upon tens of thousands of dollars over the life of this mortgage just because we have an early conversation and plan for it. So if you have any questions, please do call into the studio here, 1250 WTMA, the Big Talker, 843-556-1250. Call in. We can talk through your situation or your scenario or experience that you've had in your last mortgage or real estate purchase. I'd be happy to talk about it. So when you go in and we talk about planning for your next home purchase, we're going to break it down further. There's really two hurdles that you need to jump over when you're going to get a mortgage application. And they really don't, one is separate from the other. The first one is income. What does your income look like? And what does your income need to look like to be able to buy the house that you want to make a purchase on? Well, income and what you have actually flowing into your bank account can be very, very different from qualifying income that we use when calculating your mortgage payment. There's some very, very distinct and significant differences. For example, do you work overtime? Do you receive bonus income every year? Do you receive any kind of commission income? These type of incomes that are outside of just a base salary, they have to be averaged over the course of the last 2 years. So we have to take a look at your last 2 years of tax returns, last 2 years of income history, and make an average. But that doesn't stop there. What if you worked a lot of overtime in 2014, but now in 2015 you haven't had to work as much? Well, the guidelines, Fannie Mae and Freddie Mac guidelines, and the Federal Housing Authority guidelines require that if that's the case, if your income, overtime, or bonus income has decreased from 2014 to now, we have to go with only the decreasing number. Now, that's a conservative way to do it, but it really highlights the differences and the importance of thinking you know what you can buy and actually finding out what you can buy. The only way you can really find out and know for sure what you can buy is to talk to a professional like me. Write down my phone number, 843-300-7870, or go to my website, www.lowcountrylending.com. I'm going to take you through the process, complete a free buying power evaluation so that you can know what that answer looks like for you. So that's the first hurdle, income. And we got to document and we got to track and we got to calculate and find out what that income looks like for you, because that's going to be the deciding factor about what you can buy. Now, I'm happy to say at Movement Mortgage, our job, what we do is we do mortgages. That is what we do. That's who we are. We're not a big bank out there where we care about referring you to get a car loan, making sure you open up a bank account and a checking account, and, oh, would you please transfer over your investments into our wealth management program? Oh, and would you be interested in identity protection as well? That's not who we are. That's not what we do. We do one thing, we do mortgages, and we do it great. That means the banks who've got all these other things, they're spread so thin, they like to tighten the reins a little bit. They like to tighten the reins on those lending rules with things called overlays. So Fannie Mae, Freddie Mac, the main investors for the mortgages that you're out there getting, VA, FHA, they set out these guidelines and they set rules for lenders to follow in order to issue a mortgage. Banks will take those rules and put overlay rules and tighten the net or cast a smaller net and say, well, we understand we could do the lend on these outside gray area customers, but we don't want to. We feel more comfortable inside the net in our safety zone. An example of this would be credit score. The FHA will allow for first-time home buyers with a credit score of all the way down to 580 to get a home mortgage. A lot of banks won't go down to 580. They stop at maybe 620. Movement Mortgage, we go all the way down to 580, and I'm closing probably 1 or 2 loans a week, if not more, with credit scores between 580 and 600 FICOs. So if you're out there thinking, man, my credit's probably not strong enough to buy a house, I'm here to tell you, you might not be as far off as you think. You might be ready. That's why you've got to reach out to me. That's why we got to talk about this and take you through it. So income is the first piece. The next piece is down payment or funds for closing. Verifying funds for closing can be a tricky thing because we're required to track where all your money moves, where it's coming from. Where is that money that's being used to put down in your house? Where is it coming from? And it has to be from a valid source. It can't be put on a credit card, for example. It can't be from unsecured loans. It can't be from personal loans. You can't go to a title loan company and get money to put down in your house. So, and on top of that, even if you think, well, that's not a problem for me because I've got my money in my IRA, I'm retirement age, I'm going to pull it out of the IRA and I'm going to close on the house, no problem. Or I've got it in a mutual fund over here and I just cash out the mutual fund and I'm going to close. Well, we got to track all that. We got to track the move from the mutual fund into your checking account, track the deposit in from the checking account, the wire transfer into the attorney's office, and that can be a headache. If you call me now and we talk about it now, I can help plan for it. And I can help you plan for having the money in one place, in a simple place, so the documentation is easy. I can coach you to a place where you're ready to make that purchase when it comes up in 3 or 4 months. And we make it an easy, simple process so you can fully understand what you're getting into. I can't stress this enough. Planning ahead, planning early. I don't care if you're a year out. You're a year out? Great. I can put you in a spot right now, give you advice, give you the tools that you need to know so that you can put yourself in a place that maybe if you're buying in a year, if you wait 11 months and talk to me, our options are going to be limited. Whatever the situation is in that moment, that's what we're going to have to work with. But you call me a year early. If you call me at 843-300-7870, that's my cell phone. You call me and we can plan ahead for that purchase next year. And I can open the door to multiple products, multiple options, conventional loans, down payments, avoiding mortgage insurance. I can get your credit risen, get your credit up, and get you so into you can save your family tens of thousands of dollars. You know, when we come back, I'm going to transition from talking about planning now to buying now. We're going to go into buying now and investment properties. So we're here on 1250 WTMA, the Big Talker. I'm Bill Sandvig. This is Mortgage Matters, and we're going to be right back.
Bill Sandvig has more Mortgage Matters straight ahead on 1250 WTMA, the Big Talker. WTMA. This is Mortgage Matters on 1250 WTMA. From Movement Mortgage, here's Bill Sandvig.
This is Mortgage Matters, and I'm Bill Sandvig. Please call in today. We are live at 1250 WTMA, the Big Talker, 843-556-1250. I'd be happy to talk to you about any mortgage-related questions, real estate related questions that you might have. If you want to share a story about a situation you've been put in or that you might be in, I'd be happy to go over it with you on the air and give you some advice. And one of the best pieces of advice that I can give you for sure is reach out to a local representative. When you're going into a real estate transaction, call someone local. Bankrate.com, mortgagerate.com, all these places online, they're going to have these banks that are on the verge of folding under, and they're giving away the very cheapest rate that they can find. And you might save yourself 0.1% interest rate. But at the end of it, when you don't have a local partner who knows the local real estate team, who knows the local insurance market, who knows the local attorneys that can get you through this process, the stress is not going to be worth the $10 a month you're trying to save on your interest rate. I'm telling you, because when your family is packed up in a moving van and you're trying to sell your house and the sellers of the house that you're buying are trying to buy their next house and everything is hinging around your mortgage company getting your loan done, and you've got your bags packed and everything is in the car ready to move, and your dog is in the kennel, you don't want to put your family in a hotel for a weekend because this company online, this abcmortgage.com, can't get ready, and they don't know who to talk to, and they don't know how to get things done. So you got to talk to someone local. You've got to call someone local. And you can call me. Call me first. My cell phone, 843-300-7870. You can find me there at my website at www.lowcountrylending.com. If I can't help you, I know all the people in town. I know all the players in town. I've got the strongest and best partners that I work with every single day. Partners like Jimmy Foti of Foti Law Firm. You can find him at www.fotilawfirm.com. An amazing local prominent real estate attorney. This guy knows what he's talking about. He knows what he's doing. He gets through the deals, solves complicated title work issues. He's always available. I'm telling you. Partners like that. Partners like Andrew Muller of Mappus Insurance. Andrew's the president and owner of Mappus Insurance, a local insurance brokerage here downtown, does property and casualty. I'm telling you, Andrew and his team, I've never met anyone who knows more about South Carolina coastal flood insurance than this guy does. Every single thing that I've learned from him. I've seen him speak at countless seminars. He's been on the air countless times, and this guy knows what he's doing. I have seen him. People have this tendency to go to these big nationwide companies that are spending your money on advertising instead of knowledge. I've seen Andrew take what was going to be a $3,000 flood insurance policy, take the time to identify that all you need to do is put some ventilation in your crawl space. If you add 1 or 2 more pieces of ventilation, then we're going to get your code into the next level of the flood code, and your coverage is going to go from being $3,000 a month down to $600 or $3,000 a year down to $600 a year, $2,500. I've seen it happen multiple times in savings just because you use someone local who cares, who's going to be here for you when you need service on the back end. So please reach out to me. I'm going to put you in touch with amazing people that are going to help you through this transaction, amazing local real estate agents. If you're thinking about going into a real estate transaction, let me get on the real estate bandwagon for a bit. You have got to call a local real estate agent. Do not try and sell your house on your own. Do not walk into a new home builder without a real estate agent by your side, because a real estate agent is going to get you more. They negotiate all day, every day. That's what their job is. They know the ins and outs. They know what is in your best interest. They want to represent your best interest, and they're here to make you money and to save you money in a deal. I mean, it's kind of like I get the question, do I really need a home inspection for this house I'm going to buy? That's $350. I'm going to get an appraisal anyways. The appraisal is going to tell me what it's worth, and I should get that home inspection. Yes, you should get a home inspection. Now, the mortgage company doesn't require a home inspection. All we need is an appraisal, but the home inspection is going to get into the bones of that house you're about to buy. It's like buying a used car. You want to take it to a mechanic, that local mechanic you trust, and have it looked at, don't you? You want to have the same exact thing with your house. You got to have someone go in, look at the bones. The appraiser is not going to look at the bones in your house. They're doing more of a surface level review. That's for value. That's to verify the collateral of the purchase is adequate for the mortgage company. The inspector, I'm trying to think of a time that an inspector hasn't saved a client money, because they're going to notice the little things that need to be done, and they're going to give your real estate agent an opportunity to negotiate a repair addendum on your behalf. It could literally save you thousands and thousands of dollars in little tiny things that you need to get taken care of to get that house up to par before you make that purchase. Or it could notice something significant. A floor is falling through. The roof has got holes in it. Who knows what they could find and keep you from losing hundreds of thousands of dollars on a terrible investment or a terrible purchase for your family. So for goodness sakes, get a home inspection. So what I want to talk about is in this segment is investment property purchases. So a lot of people out there, I talk to a lot of young families, young couples, and they're making their very first time home purchase, and we talk about, should I get a 30-year rate or should I get a 5-year rate? And the conversation comes up. People tend, especially with the interest rates being so low right now, people are tending towards getting these 30-year fixed rates. And I think that planning for the future, a common thing about why they want to get the 30-year fixed rate is because, if they want to move sometime in the future, they would like to hold on to this current purchase as a rental home, as an investment property. And so that's a very normal and expected way for people to build investment properties is buy a home that they're happy with now and live in it for a while. And then when they're ready to upgrade or get, their family is growing or family is decreasing in number of people going off to college and they're gonna downsize. Well, then we're gonna keep this home rented out and buy the next house. Well, there's other ways to build an investment portfolio. There's other opportunities out there. And while the lending requirements are a little bit tighter than a first-time home buyer program like FHA, we can still get you into an investment property and get you qualified with less than you might think. There are different ways to leverage the equity you might have in your current home into an investment property purchase. There are ways to tack together first and second mortgages to get you into an investment property purchase. There's ways to use the income that's going to be generated from that investment property to help you qualify for that purchase. There's so many creative things out there that you can do to get into the house. And one of them, probably my most favorite one, would be multi-unit home purchases. A multi-unit home purchase is an incredible opportunity to actually buy a house as a primary resident. So you get the advantages of buying a primary resident home, even first-time home buyer advantages like FHA. Believe it or not, you could have a 580 credit score, move into a multi-unit home as a primary residence, only put down 3.5% on the purchase price, and move into a 4-unit home where the 3 other units you're not living in are more than paying for your mortgage. You don't even have to have a significant income to pull that off because the income that you're going to get from the rental units are going to be added to your current income and help you qualify for the house. Let's do a little bit of math on this and talk about how that might play out. If you were to find a multi-unit home for $250,000, and they're out there, I've helped 4 customers in the last 4 months buy a 4-unit multi-unit home for $250,000. So they are out there. And if you were to spend that money on a multi-unit home, you'd be looking at a payment of around, after you throw in taxes and insurance, probably around $1,500 a month. $1,500 to $1,600 a month for a 4-unit property. Now, these different properties, the last example I did, they were all 2-bedroom units located in North Charleston. And these 2-bedroom units were each renting for $750 a month. So the couple moved into one of them. They put 3.5% down on the house, which is less than $10,000. They put less than $10,000 down on the house. The closing fees were covered by the seller. I helped chip in the rest. And they rented out the other 3 units for $750 each. So the income that they were generating from the property was $2,250. Their payment was just under $1,600. So they were making $600 a month, over $600 a month to live in their home. And this is the cool part. They both worked. They only had one working couple in the family. They just graduated from college. It was a starter job. He was making less than $24,000 a year, and they qualified for this $250,000 home purchase because we're able to use the income that's generated from the other properties to buy the house. Think about that. So this young couple who were just getting started with their adult lives, were now managing 3 rental units what it takes a lifetime, or some people that even want to, they have goals, they talk about it. I'd love to build up some residual income for retirement and have a couple of rental properties that I'll have paid for when I'm older, and the income is just going to come in. I'm not have to worry about it. And then life gets in the way and it doesn't happen. But this couple, this young 22, 23-year-old couple, making less than $24,000 between them, were able to buy a house for themselves and 3 rental properties from day one. That's powerful stuff. I mean, that's really powerful stuff. Think about as they grow and their incomes grow and they get farther along in life, think about when they move out into maybe their forever home, maybe a single family home, and now they've got 4 rental properties. Who knows? Maybe they'll go do it again. They'll go buy another 4-unit home, and before they're 30, with almost no money out of pocket, they'll be sitting on 8 rental properties. What incredible residual income for retirement! They could be, they're going to be in their 40s and have all the houses paid for, 8 rental incomes coming in, and making $70,000, $80,000, $90,000 a year with hardly any money outlay. It's powerful stuff. It all starts with reaching out to me at 843-300-7870. And please call into the studio. We're going to come back after the break. We're going to talk a little bit more about if you're selling your house, what you got to be thinking about when you're selling your house. It's more than just getting your house staged. There's lots that goes into it. So stay tuned right here. I'm Bill Sandvig on 1250 WTMA, The Big Talker. This is Mortgage Matters. See you next segment.
Mortgage Matters continues next on Charleston's Big Talker, WTMA. WTMA. Now, let's get back to Mortgage Matters on the Big Talker. From Movement Mortgage, here's Bill Sandvig.
You're listening to Mortgage Matters here on 1250 WTMA, The Big Talker. I'm Bill Sandvig, and we spent some time talking about why the time is now. If you're thinking about buying in the next 4 to 6 months, that you might want to move that up, and it's because interest rate hikes are coming. So I want to circle back around a little bit and talk about how the impact of an interest rate hike can have on your buying power. So if you're buying a $200,000 home, or let's say you're getting a $200,000 mortgage. So whatever you're putting down on the house, you're going to be left with a $200,000 mortgage. Right now, with today's rates, you're going to be looking at around a principal and interest payment of about $950 a month. Now, if interest rates are to increase by 1% from now and the next 6 months, which is very reasonable, very, very possible, if that takes place, the exact same $200,000 mortgage is going to be $130 a month more than what you have today. So you're going to spend, at the very minimum, $130 more per month on that exact same house. Now, what's the impact of that over the life of your entire mortgage? Well, get ready, folks, because it's not any small potatoes. You're going to pay over $32,000 more in interest over the life of the loan just because you waited to make that purchase for rates to go up. Now, let's look at the other way. Maybe the $200,000 mortgage and that $950 a month payment is the most that you can qualify for. That's the most that you can qualify for based on your income. So when interest rates go up, you can't just spend more money per month on your house. That's not an option for you. So now you have to lower the price of your house. You can now afford less house. You're going to have to rein in your buying power and your search down to a $175,000 home. So today, you're looking at a $200,000 home. In 6 months, because of interest rates, you're looking at a $175,000 home. Let's stretch that out to a year. Last year, the last couple of years, we had almost 10% increase in housing values in some markets. 10% increase in housing values year over year. And how about the impact of that? Let's say you're to wait until next summer to make the purchase. If we have that kind of year again, which I don't expect we will, but for easy math, let's say the value of today's houses go up 10% for next summer. Well, the $200,000 house that you're looking at right now that you're going to be able to get into for $950 a month, now it's $220,000. So not only is it $220,000, the interest rate's gone up as well. So The interest rate's now up 1%. The house is up 10%. And the exact same house that you and your wife are looking at on Zillow.com is now going to cost you almost $1,200 a month in principal and interest payments. We've gone from $950 to almost $1,200, almost a $250 per month, $250 per month increase in your cost of living in the house that you're looking to buy. That is significant, folks. And that is not far stretched. That's not some fantasy reality that'll never happen. Because it's going to happen. It actually happened. It already happened in 2012 to 2013. We had interest rates go up from the summer of 2012 to the summer of 2013, 1 full point, and housing prices followed suit. And people that thought that they were going to be able to buy the house that they were looking at couldn't buy that house, and they were looking at different property. So the moral of that story is to call me now, reach out to me now so we can have the conversation, so I can introduce you to a local real estate agent to get you out there looking at homes. Maybe you're out there thinking, I'm not ready to buy right now because I don't think that I can qualify. I can take you from not knowing for sure to having a solid answer about what you can buy, and at the very, very least, get you on the track and on path to be able to make that purchase. You got to call me, though, at 843-300-7870. That's my cell phone. Call me anytime. I'm happy to talk through it with you, talk through your mortgage goals, talk through your home purchase goals. You can also find me on my website at www.lowcountrylending.com. You can take a look at me, see a picture of me right there, do a little bit of reading about my background. What I like to do more than anything is to talk to you about your home purchase. So if you're out there, you're thinking about selling your house, it is a seller's market, very hot right now. The market is exceptionally hot. We're in multiple offer situations. If you're thinking about selling your house, the question's got to be, and I'm shocked at how often I get phone calls from customers that say, hey, I put my house in the market and I didn't plan ahead past that. I didn't think about what I was going to do next. If you're thinking about selling, you got to reach out to me so you can think about buying. We got to get you in a place and get you fully approved and get you qualified to make that next purchase. If you think that you got time to sit there and plan ahead for that, you don't. Because as soon as your house hits the market, it's going to be gone. I've got real estate partners who are selling the houses at an above asking price because they know how to market your home properly, know how to get your home sold, and how to put it in the right place in the market for it to move and move fast. They know how to take advantage of a seller's market. Don't do it on your own. You're going to lose money. You're going to lose money if you try and sell your house on your own because think about it. If you're out there and you're ready to make a home purchase and you saw a for sale by owner, what's the first thing that you do when you see that house for sale and you see that price? What's the very first thing that you do? You subtract the cost of the real estate commissions and say, well, that guy's not paying real estate commission, so I'm going to go ahead and offer him less money because he's saving it anyways. So you haven't gained anything. People are going to come at you. They're going to come at you low and they're going to come at you hard. And the real estate agents that are buying agents and know how to negotiate a deal, they're going to run all over you. So you got to reach out to me so I can put you in touch with a strong listing agent and a strong person to sell your home and get you top dollar for it. Got to reach out to me at 843-300-7870 so I can talk you through it. So because it doesn't stop there. When you get in touch with my partner and they get your house in the market, your house, they're going to sell it fast in this market. They're going to sell it real fast. And I don't want you calling me a week after your house is under contract saying, uh-oh, Bill, you told me I should call you now and I didn't. And now my house is going to be sold in 23 days. I haven't even picked out the house I'm moving into yet. I'm not really sure what I'm going to do. I don't want you to be in that spot. So let's plan ahead now. Let's get you fully approved. Let's know what your house is expected to sell for. Talk about what you can get into and get you out there so that when the time does come and your house sells and you haven't picked out your house yet, then you're now under the gun to pick that house out, that I can get you closed in as little as 2 weeks with the movement mortgage process, the upfront underwriting, the 7-day processing, the 1-day close. Because we close loans in less than 2 weeks all the time. But if we plan ahead, and we plan ahead early and often, it's going to be much easier to get that done because we've done all the hard work up front. Our underwriters have already gone through your file. They've already gotten you fully approved, and we can go out there and help you win that next house and be ready to close fast and be ready to close stress-free. That's a big key, folks. Stress-free. They say that one of the most stressful things you're ever going to go through in your life is moving. It's the number one stressful time in a family's life and an individual's life is moving. It's not a fun process to pack up your boxes and go through the mortgage process and worry about moving all of your stuff and figuring out how to unpack. It's stressful. It's challenging. So let me, Bill Sandvig, with Movement Mortgage, guide you through that process and take part of that stress off the table. I can just take it away. I'm going to handle all the hard lifting. My team is here. I've got a team of 5 additional people that work with me, that are here to serve you and get you through that process, literally be with you and hold your hand every step of the way. Let me take that stress off. Let me get you through this next purchase by reaching out now, by talking through it now, so I can get you in touch with the right people. It's going to make a difference for you. It's made a difference for countless people. I've already closed 115 homes this year, getting 115 families here in the Charleston Tri-County area into their homes stress-free. So, I mean, there's probably nothing that's more important than planning ahead. Everything that I do, I've talked about that exceptionally fast process that Movement Mortgage has. We get 70% of our customers clear to close through processing in 7 business days. Amazing numbers when all the banks are taking forever, taking 45, taking 50 days, taking 60 days. We're doing it in less than 2 weeks. And what a stress, what a life changer that is for you. It makes such a difference. But for me to get it done, you've got to call in. Hey, when we get back, I'm going to talk about how that process, how that 6-hour underwrite, the 7-day process, the 1-day close can change things for you when your family goes out to make that purchase. I'm Bill Sandvig, 1250 WTMA, the Big Talker. You're listening to Mortgage Matters. Don't go anywhere, because I'm going to talk to you about how you can save money and make a difference in your next home purchase. Stay right there.
There's more Mortgage Matters with Bill Sandvig coming up next on the Big Talker, 1250 WTMA. WTMA. You're listening to Mortgage Matters on 1250 WTMA. Once again, here's Movement Mortgage's Bill Sandvig.
Thanks for staying with us. I'm Bill Sandvig. This is 1250 WTMA, the Big Talker, and I'm hosting Mortgage Matters here with you in the Low Country. It's been a really good show today, and I'm going to finish it with the way I finish it every week, and that's talking about how to get you into your house, how you can make your next home purchase, have it be stress-free, but most importantly, get the house you want at the very best price. I'm going to talk about putting you in a position of power, a strong negotiating position, so that you can get the very, very best deal, and more importantly, win out over all the multiple offer situations that are going on right now. We here in the Low Country, in the Tri-County area, are experiencing a strong seller's market. There are multiple offer situations happening all over the place. All my realtor partners, they're coming to me. They're saying, Bill, I need a pre-qualification letter for an approval. I need an approval letter for this price, and this price, because we're about to go into it. We're about to roll up our sleeves and get into some heavy negotiation. And my job, Movement Mortgage's commitment to you, is to not wait until after you're under contract to go through the motions and go through that mortgage underwriting process. We want to do it before you go under contract. We want to get you fully approved prior to going under contract for that home, so that when you do make that offer, you are in a position of power. I want you to imagine you're out there, you're selling your house. 2 offers come in. One of them is a cash offer. The other one is a pre-qualification letter. A pre-qualification letter, which, by the way, if you have one in your files, maybe you've gotten one from a bank in the last couple of years, a pre-qualification letter, it says on that pre-qualification letter, this is not approval for a loan. Let me say it again. Sometimes it often says it in bold. This is not approval for a loan. This piece of paper that we are about to go under, this $500,000 real estate transaction, is not approval for a loan. So good luck. Good luck. Because if things fall through, hey, we told you, the bank told you up front, it's not approval for a loan. We're not making any promises here. We thought you could get it. It seemed like it was good, but once we got into the nitty-gritty of it, we couldn't get it done. And I understand that everybody packed up their houses. I understand that everybody got underway on this huge transaction. I understand that you thought you were moving into your house, but we told you up front that pre-qualification letter was very clear. This is not approval for a loan. Well, Movement Mortgage doesn't want you to go under that transaction. Movement Mortgage doesn't want you to have to sell your house or try to buy a house without having that commitment. That's what we want to give you. We want to give you a commitment. A commitment letter that's a fully underwritten, fully approved loan. So when you go out and make that offer, you are in a position of power. If you're selling your house, I was about to say, and one's cash and one's a pre-qualification letter, which one are you going to take? Which one is your real estate agent going to tell you to take? They're going to tell you to take the cash. Of course. The cash is closing in 2 weeks. The cash is there. You've seen the money in the account. There's no risk of the cash going away all of a sudden. So you're going to take that cash deal. Would you even maybe take less money for the cash deal? Of course you would. You don't want your house to end up in escrow for 45 days, the contract to run out, everybody signing extensions. You don't know if it's going to close. Why? Because when you sell your house, you're going to buy the next one. So you're going to take the cash deal. Movement Mortgage is here to make you, the non-cash buyer, look like a cash deal. We're going to get you through underwriting and fully approved prior to making a contract. Not only that, we're going to do it so fast that we're going to make your head spin. You get me, Bill Sandvig, at 843-300-7870. You get me everything that I ask for. I'm going to turn it in, and underwriting is going to review that application in 6 business hours. I'm going to say that one more time. 6 business hours. Nope, I'm going to say it 2 more times. 6 business hours is when you can expect to get an approval, or at least a decision, on your loan application. Everyone else is taking 2 weeks, 3 weeks, 4 weeks. Sometimes it never comes. Our expectation is a 6-hour upfront underwrite. You don't even have to have a contract. Why aren't the other banks doing it? Because they are not willing to commit the money that it takes to have additional underwriters on staff to be devoted to get you in that position. Movement Mortgage does it. That's why we've been the fastest growing mortgage company in the country since 2008. It's why we've gone from 4 employees to 2,200 employees in less than 7 years. It's why we are now the 13th largest purchase mortgage company by units in the country in less than 7 years. It's why we are the number 2 purchase mortgage company in the Tri-County area in less than 2 years in this market. It's because we're putting people in a position of power that when they go out and make that offer on their house, they have a commitment letter. We get to call that listing agent. We get to say, guess what? Mr. and Mrs. Smith are fully approved for their loan. There's no risk of that loan falling through. We've done the hard work. I understand you got 2 more offers. I understand that one of those offers is even for $1,000 more than what my client is willing to spend. But guess what? You take that extra $1,000 and you're not going to know for sure that you're going to close on your house in 2 months. You know for sure that you're closing on this house because we're done. We've gone through underwriting. They're approved. And not only that, guess what? We can close in less than 2 weeks because Movement Mortgage is going to get my clients through that process after approval in less than 7 days, 7 business days, and then 1 day to close. And so I know it looks like our offer is $1,000 less, but you're actually going to make more money, seller, because you're going to have to make 2 more mortgage payments if you go with that other offer. You don't have to make any more mortgage payments if you go with us because we're going to close before the month is out. Think about how that's going to change you when you go out and buy that house. Think about how my company and my team are going to get you in a place to win that house. The house after a full Saturday in a 98-degree weather. You spent a full Saturday walking into homes, looking for houses. You picked out the one that you love, the one that your family loves. You make an offer on it, but you only had a pre-qualification letter. The pre-qualification letter said this is not approval for a loan. And hey, there was 4 more offers. And Sunday you found out, well, the listing agent's got a bunch of offers, so we're going to have to bring us them our highest and best. So now you talk about it again. What's your highest and best? How much are you willing to spend on this house? You give it to them Monday morning, Monday afternoon, you find out you didn't get the house. What are you doing next Saturday in the next Saturday of 98-degree heat? You're looking at 10 more houses. Because all the houses you looked at last weekend, that list, they all went under contract too. Now you're on your B list. I don't want you to be on your B list. I want you to be on your A list. And I want you to get that house because Movement Mortgage and my team have put you in the most powerful position you could possibly be in. The most powerful position to get your house. Think about how that's going to change your next transaction. Think about how the stories you've heard, how it could have changed for your family, for your friends. You got to call me, Bill Sandvig, at 843-300-7870. Call anytime. Go to my website at www.lowcountrylending.com. Fill out a free buying power evaluation. I'm going to get you in a place so that you can get that next house and stand out amongst the crowd. Because I'm telling you, when it comes to real estate, when it comes to mortgages, there's cash, there's movement mortgage, and there's everybody else. So come on, don't use everybody else. You got to call me. Hey, thank you so much. This has been Bill Sandvig on Mortgage Matters on 1250 WTMA, The Big Talker. I'll be here next week.
You've been listening to Mortgage Matters with Bill Sandvig from Movement Mortgage. Call Bill for your mortgage needs at 843-300-7870. That's 843-300-7870. Listen again next week at this time for another edition of Mortgage Matters with Bill Sandvig on 1250 WTMA.